House prices dropped in May. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Still finishing off my stein of coffee, and I thought we'd have a look at this article from ABC discussing house prices dropping in May. Remember, there's a whole lot of FOMO out there. There's agents telling us now's the perfect time to sell. Hurry up and buy, quick. It's all mixed messages, isn't it? It's funny wading through it all. But one of the interesting things, and I think the most important thing coming out of this article, that's right here in the title, is what's happening in September. Now, September, a fantastic year, a month of the year, when JobKeeper may disappear or evolve into a new form, where the banks, granting people their mortgage repayment holidays, will suddenly pull the pin, or will they? Do you think JobKeeper will stick around? Do you think it will evolve into a new form? Will it be JobKeeper Plus? Is this the first step of UBI? Do you think Australians could even handle UBI? Do you think our tall poppy syndrome that we have here would see anyone over a certain income getting UBI being pounced upon? I personally think if we implement anything like that, it'll just evolve in just such a gargantuan mess where there'll be so many different versions of UBI, it'll be no different than current welfare. That's what I suspect. You know, if you can, I don't know, if I can bet on two ways, one of increasing bureaucracy and the other of decreasing bureaucracy, the cynical bastard in me is always going to lean towards increasing bureaucracy. Let me know your opinion in the comments, guys. Maybe you're more optimistic than I am. So let's have a look at this. House prices have edged lower in May. They've edged lower in May. Australian house prices are so far holding up amidst the economic downturn caused by the pandemic, but analysts warn the real test in real estate will come once banks' mortgage holidays end later this year. CoreLogic monthly index shows nationally prices fell an average of 0.4%, but there was a significant variation across the regions. And here's the thing, guys, with housing, with property, Australians love our property, and we need to understand it's the edge cases. It's the edge cases. It's the last house that's sold in your street that's going to affect your price. It's the last property in the suburb that's going to affect the price. So if we have all these people on mortgage holidays, all these Airbnbs, they're not getting any income, and they're just scraping by till September waiting. Until they go, nah, stuff it, we're moving it. We're moving it. And they put it on the market, and it doesn't sell. Okay, we'll cut the price. We'll cut the price. Move it. Bank's calling up. Sell, sell, sell. Get it for whatever price. Boom, all of a sudden your suburb's down 15%. Then the next one, and the next one, and the next one. That's the thing with the edge cases. So we'll have to see. I suspect they will do everything they can to prop up this property market. Everything they can. It's our sport. You got AFL, you got rugby, you got property. What order do you think that should be in, guys? Should property be number one? How many times have you had a few rums at the rugby, which are bloody expensive, and everyone's talking about property or investments or this? Actually, I think it's probably number one, guys. It's probably the one national sport we have. There are different fundamentals around the nature of employment and how dependent these markets are on international migration. CoreLogic's Australia Head of Research, Eliza Owen, told ABC. Melbourne, for example, is so far leading declines, with property values down 0.9% over the month. We're also seeing differentials between the metropolitan and regional areas of Australia, where the combined capitals saw values decline by 0.4% over the month, while the combined regional areas held steady. Darwin was the weakest capital city, despite being the first to substantially lift pandemic-related social distancing restrictions, with prices down 1.6% last month. Hobart had the strongest monthly price gains of 0.8%, despite seeing one of the steepest falls in rents over the past 2 months. It's because, well, they're right. This mortgage holiday, people are holding on. People are going to, property, physical assets, you're emotionally invested. It's no different to anyone else. People don't want to take the loss, so they're going to hold on. CBA economist Christina Clifton also observed a substantial difference between price moves at the top and bottom end of the market. Prices are falling the most for the most expensive homes, she noted. Well, that goes contrary to all these articles we're reading where paid $500,000 over reserve. It's just the upper quartile, guys. Here's the thing. Not all things are the same. Not all houses are equal. Not all people are equal. Oh, God. How dare you say that in our PC world, Florian? Yeah. Welcome to reality, kids. This is just showing us unit price growth, guys. This is the red rooster line, where you get the western suburbs, lower socioeconomic value, negative growth. Negative growth. All the nice ones on the eastern side of the city in Sydney, better growth. All things aren't equal, guys. And I think a lot of the bubble impacts on the people who've bought up inflated houses or units, which are no different to anything else. That's going to be interesting to watch. I think it'll be keenly felt there. In Sydney and Melbourne, the prices for the most expensive 25% of properties fell by 0.6% and 1.3% in May. The price for the cheapest 25% of properties rose by 0.1% in Sydney and fell by 0.3% in Melbourne. However, the overall decline has so far been much smaller than most analysts expected, and defying fears that property prices could lose a third of their values in the worst-case economic scenario. Yes, but that third of the value for the worst case is over the next 2 years, everyone. It's not now. We're not going to see that now. I mean, could that be possible? In a month, a drop of that much? How much market activity would you have to have? We haven't had that much. And remember, these things take a long time to settle. Property isn't like the stock market. It's not like crypto. Crypto, sure, you could lose a third in a day. Definitely. A whale could plunge the price of something to manipulate it so their options that they've got will kick in or whatever, and they'll make money. That market can be manipulated. Not property, a little bit harder, a little bit slower moving. Remember, there's a lag. There's a delay. So any of these predictions of 30%, that's years ahead. So you've got to take that into account. If you're ready to jump in and you can say, I don't care, I can afford this mortgage repayment, job's secure if it takes a 30% drop in the next 2 years, but I'm in it for 10 or 20. So it's a different world. The problem is you've got a whole lot of FOMO, you've got a whole lot of news, people are getting emotional, and houses are emotional, and it's just something you need to train yourself out of. I'd recommend going through the Persuasion reading list on Scott Adams' website, the comic book creator. It's very interesting just to see how you can be emotionally manipulated, how you can be persuaded, all the biases that you can have. I think that perfectly, it's a big thing to consider with property. It's a big thing to consider, particularly if you're trying to jump in. So banks are propping up property. Ms. Owen said 2 factors appear to have held up the market in May. I think May was a more positive month for the real estate industry than I would have expected, because sales volumes rebounded about 20% over the month off the back of a lift in consumer sentiment, she said. But while transactions were up, total stock for sale on the market was down by about a quarter on where it was this time last year. Not a lot of people are selling right now because not a lot of people have to sell. I think that is a reflection of banks' policies where they're offered this kind of holiday on mortgage repayments, she added. So people are talking about September when the mortgage repayments disappear. What if I put an argument to you, people have taken this mortgage repayment, held that money aside, and then using it so they can run out a bit longer. So, some brokers I'm talking to are thinking next year will be when we'll start seeing the impact. February. So maybe September may be a bit of a anticlimax. After Christmas, after that spending, after the credit card bills come in, and then go, oh, wait a minute, the economy still isn't picking up, work still isn't returning, then we might see it. So, however, the mortgage repayment holidays generally only apply for 3 months, with the option of a further 3-month extension at the discretion of the bank, meaning most are scheduled to end around September or October. A lot of lending institutions have offered these reprieves on mortgage repayments, and I think once those repayment holidays end, if we don't see a reasonable improvement in the labour force, then there will be a real test for the housing market, because that's when we might see more distressed listings come onto the market, Ms. Owen forecast. Already CoreLogic data around real estate agents' activity is showing a marked increase. Prior to Easter, activity was 60% lower than at the same time a year ago, but by the end of May, agent activity was only 8% below a year. So here you go. If you jump in now and then all of a sudden you start seeing a crash in February next year, how would you feel? Would you care? Let me know in the comments, guys. Or would you just cop it? Because remember, the value of your house, it's only money. Or it's not even money, actually. It's just numbers on a screen that can be adjusted depending on sales in your surrounding area. It doesn't actually prove to you that you'll be able to sell it for that the market will accept that value. CoreLogic noted that agent activity on the RP data platform is highly correlated with the number of new property listings coming on the market, with a 2-week lead suggesting new listings are set to rise further early in winter, which is usually a seasonally weak time for property listings and sales. So stimulus likely on the way, and we've discussed this in previous videos, just different options. And we're starting to get some results in from the vote I put on a community forum, just looking at if stimulus will get people to pull their future projects forward or just jump into something new. Although Ms. Owen does believe that banks will continue to extend as much flexibility as they can afford to, given that it is not in their financial interest to foreclose on a large number of borrowers at once and flood the market with forced property sales. Exactly. This is the banks acting in their own best interest, guys. They'll do whatever they can to keep the property market going. They don't want it to fall. They can't let it fall. It'll affect them too much. Already we're seeing institutions trying to extend interest-only periods or help mortgage holders get onto plans that reduce their borrowing costs, she said. The current situation just exacerbates part of the risk in the Australian economy, which is that we have high household housing debt. However, Chief CBA economist Christina Clifton said that both the Commonwealth and state governments are likely to introduce further policies to stimulate construction and the property market. Media reports have suggested the federal government will announce a first home buyer's grant of at least $20,000 towards newly constructed homes. There are also reports of a potential cash grant scheme for those wanting to renovate their dwellings. Both New South Wales and Victoria state governments are considering phasing out stamp duty and replacing it with land tax. No, just get rid of it. Fire people. Reduce things you don't need. Come on. Don't put in a land tax. If implemented, these initiatives will support the housing market. And my arguments against land tax are purely based on a precedent being set in these states, which will mean that it'll eventually come to my state and I will have to pay it. So that is completely based on my personal bias there. I'm making that clear. I'm sure a lot of you can agree with me there. Will we get credited for the stamp duty we had to pay buying a house to offset the land tax? Anyway, guys, here we go. Property going down in May. It's definitely going to be interesting to see when these banks remove support and what will happen. Because the cost, I was looking at it. I was looking at the cost of servicing $1 million mortgage. It's hardly anything. It is just, because I haven't looked at these for a while, guys. It's been 6 years since we bought. Interest rates have changed a bit in 6 years, guys. That cash rate has gone down a little bit since then. So we'll have to see. They'll do whatever they can to keep kicking this can down the road. Let me know your thoughts and opinions in the comments below, everyone. Are you planning to get in the market? Are you holding off to wait until next year just to see what happens? As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and you'd like to support the content we make here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can use Gold Pass from the Perth Mint, buy a merch from HeiseSays, or support us via PayPal. Take care, everyone. I'll see you in the next video. Bye for now.